John Murphy's book, Technical Analysis of the Financial Markets, that is a retail trader's Bible. If you do not have that book, you need to get it and read it. And everything in that book, turn it upside down. And you will be a 90% bracket success story. It's just that simple. Everything in that book is horseshit. It's wonderful because it's programming everybody to do the dumbest shit in the world. Look at charts this way. And when you do, you shit yourself. Your account's blown, you have loss after loss after loss. It doesn't make any damn sense. And when I said to myself, I am not looking at this shit like this no more. I'm gonna fade this. And what gave me the idea was, there's a pattern, the head and shoulders pattern. It's a topping formation. And I mean, when I was trying to learn how to be a short seller, and that was one of the things I was afraid of, I didn't understand, how can you sell short something you don't have? How are you going to sell something you don't own? So it was a real struggling point for me, because, like I said, I'm not a mental giant, but the long and the short of it is, when I first started dabbling in it, the pattern that I was trusting to be the reason why I'm going to sell short was the head and shoulders, where you have a swing high, a higher swing high, and a lower swing high. And it's like 3 swing highs with 1 higher in the middle. And then there, you connect the lows that run beneath the left shoulder and the right shoulder of that price action. And it should project lower the same amount or real close proximity to the range from the trend line connecting the 2 swing highs lows to the highest high. And trust me, if you don't know what I'm talking about, because I'm just listening to myself now, it sounds like a bunch of shit. And it is. But if you go to Google and look up head and shoulders price pattern, you'll see exactly what I'm talking about. Well, that was the pattern I was trying to train myself to trust as a short seller. Man, I got my ass handed to me over and over and over again. And when I look back at my journals, it's the times when I'm fucking trying to do like Friday PM session where I'm buying right there. I was looking at that as some kind of a topping pattern. Not that that was a head and shoulders pattern, but I would have been looking at that as, okay, it's done. Now it should start going down. Why? I don't know. It just felt like I should expect it to go down there. And that's exactly how I trade as a 20-year-old. It probably should. Probably should. Probably should. That's not a model. That's guessing. So a lot of the shit that's in that book by John Murphy is wonderful when you know how to trade like I'm teaching you. If you see those retail patterns in the market, in the price action, while my logic that I'm teaching you and how the markets are algorithmic, if there's a wrestling match between what's in those fucking book pages and what I've taught on my YouTube channel, that book's losing. There's your inside edge right there. If you can combine the times when algorithmically the things I'm teaching are likely to pan out, and you can see a retail fucking pattern that's in that book or any other YouTube channel that teaches that horse shit, that's losing and I'm winning. My logic is the market. That shit is just pictures and candlesticks and bars. That's it. Animal patterns don't fucking exist. That's all contrivance. It's all bullshit. You're making excuses for something that was completely in your favor, not because of logic. It just was happenstance. And that's why their hit rate sucks. And they have to do heavy leverage trades to get themselves out of drawdown. I don't have no fucking stupid ass, 50%, 60% strike rates. Fuck that shit. Okay. If I got to work within that, to me, that's gambling. That's gambling. If I can't know with a great deal of surety that I'm on the right side of the marketplace, number one, how do you get like that? You use a top-down approach. Look at the weekly candle. Is it likely that the weekly candle is going to expand higher or lower? You're not trying to predict a close. Is it likely to expand higher or lower? Right away, that's 80% of your whole bias problem. A lot of you don't even look at the weekly chart. You're looking at the 1 and 5 minute chart because you see me trading there and you think I'm deriving everything from that time frame. I'm not. I'm starting all the way on the weekend tonight. I'm going to look at a weekly chart, not because I'm trading, but it's just because it's pattern. That's what I do. It's my routine. And I'm going to get a feel for what's it likely to be reaching for in the weekly chart. And that's my number one bias. I try to formulate every pattern with the most leverage and maximum risk management behind those trades in that direction. Right away, that removes the bullshit that most of you are going to blow your account on. If you trade like that, it's going to be very difficult for you to blow your account if you have discipline. You still can, but it's more likely that you won't because you'll be trading mostly in the right direction. Oh, how do I know which one's going to? Everything that you see me teaching in price action, you apply to a weekly chart. Is it in going towards a fair value gap above the market price? Is it going towards an old low below market price? It's either going to an inefficiency rather above the market or below the market, or it's going to a high above the marketplace or below a low below the market price. That's it. That is it. You have four conditions divided into two premises. It's going up to do one of two things: go in and revisit an inefficiency, a fair value gap, or it's going above an old high for buy side liquidity. Two things to worry about, folks. That's it. It's only two conditions. That's it. Two conditions. If it's not likely to go up, it's going to go down. So what's it going to reach for? The nearest inefficiency, fair value gap, or the nearest short-term low. And the nearest short-term low or inefficiency, if it's being bearish, you determine where you are in the market price during the times of the day when you're going to be engaging in trading. Is there enough of a range to allow for you to profit? If there isn't, you just don't do anything. You sit still, wait for a new opportunity. How hard is that? For some of you, it's impossible because you don't have discipline. You're not willing to wait, and you have to wait for these things to come together. There has to be an agreement of multiple facets in time frames, logic, time of day, economic calendar. All those things have to come into the equation. Otherwise, the results you're going to get are random, like it was for me. And when I got good positive results as a 20-year-old, not even trading any of this shit, because I didn't know these things. I was just using stupid books. And I'm talking dumb books. And I didn't have a real good head start until I got Alexander Elder's Trading for a Living book. And the only thing good about that book is multiple time frames, 3 time frames, okay? Not just making your trade decision on one. But the beginning of the book, where it talks about how you have to deal with the mental things. And they talked a lot about alcoholism. Not that I've ever drank alcohol, because I've never drank alcohol, but I was raised in an environment that had alcoholics in it, and they were dysfunctional. And I had an uncle that introduced me to trading who was a functioning alcoholic. So all those things that he mentioned in the beginning of that book, which I think is absolutely essential reading. And again, I'll say the name of the book, Trading for a Living by Alexander Elder. Now, I have all his other books. Fuck them. They're not as good. The beginning of that book, before he even gets into technical stuff, the beginning of that book is the gem. Understanding things from a psychological standpoint. In my opinion, that part of that book is way better than Trading in the Zone. Trading in the Zone is sugar-coated bullshit, okay? No disrespect to the man. It's a good book. But Alexander Elder's portion of the book where it's all talking about the wrestling match that we have to deal with. And it made sense to me because I watched how all those things impacted my family members who were drunks, and how they couldn't succeed, and how they blamed everything outside of themselves. And that same shit happens in trading. Just because it's not alcohol doesn't mean you're not fucking drunk. You can get drunk in these markets and not even being profitable, but still drunk in the sense that you can't stop doing it, and you keep doing it knowing it's hurting you. And I did that in the beginning as a trader. And when I read his book, it made so much sense to me, because I was like, wow, I'm fucking up, and I can't see I'm causing it myself. And I'm repeating these same things that are problematic. And even though I'm not a drinker and I've never drank alcohol, I could see very easily how I would be a terrible person as a drunk or a drinker of alcohol. And this is why I never done it. And well, that's not entirely why. My 16-year-old uncle passed away from a drunk driver hitting him, and he was drinking while riding it, and he's no more. So he was like a big brother to me. So that was a major thing in my life, why I never became an alcohol drinker and a cigarette smoker and a drug user. So I've never done any. I'm a straight arrow when it comes to that. But that book had a lasting impression on me as a developing trader. And I don't think I would be where I am today had I not read it, because it gave me a perspective on how humans interpret adversity, how we interact with adversity, and how we deflect the personal invitations that we place into our environment. And then when it comes home to roost and we have to deal with the consequences of that shit, we don't want to own it. It's somebody else's fault. And that you can't do that in trading. Like you cannot have that characteristic in trading. You own it. And if you suck as a trader, you have to admit that you suck. Either stop trading or find someone that can teach you how to do the right things, and then give yourself a lot more time than you think it's going to require. If you can't do that, just don't fucking touch these markets. I honestly mean this. Don't even trade, because if you can't wrestle yourself into submission over things like I'm talking about now, it won't matter how many times I sit with a live stream. I could literally push the button and you trade right behind me. And when I stop, you're going to fail, because you haven't wrestled those demons that are, they're beneath the surface. You deal with them every day. They cause you to have anxious moments for no real reason, or to be angry and bitter when you're really no reason, to be jealous. All these things are character flaws. You have real issues going on inside of you. And if you have those things going on in your personal life, I'm telling you, the only thing that these markets are going to do is put a spotlight on those things, and they're going to amplify it. If you're a fucking drunk and you can't handle yourself with alcohol, or if you do recreational drugs until you lose your mind and shit, these markets are going to cause you to do more of that shit, and it's going to be the callus that does your ass in. You won't be able to look at, oh, I'm making money, it's going to keep me from doing those things. No, it's going to cause you to do more of those things, because when you get in these markets, the wrestling match internally, you can't make that candle go up.